Whether you're a beginner to stock market investing, a seasoned speculator used to investing online, or an advanced trader with a tried and tested trading system, I think it's crucial that you have an understanding of the 7 pillars of stock market investing. The 7 pillars will help you to focus and organise your investing education and resources, and make sure that you don't overlook any area that may affect your investing success and profits. Here's a brief overview of the 7 pillars of investing, and I'll go into more detail in later lessons. The first pillar is psychology, and it's first for a good reason. In my opinion, the most important factor in whether you'll be a successful investor or not is you. Have you got the motivation to educate yourself for the months or years it may take to become successful? Have you got the discipline to develop and refine investing systems to give you the best return with the lowest risk? Have you got the courage to pull the trigger and buy stocks once all the factors are in your favour? The next pillar is business strategy. You may not even think of your stock market investing as a business, but I think it's useful to have at least some idea of what you want out of it and how much time you're willing to devote to it. Do you see investing as a way to grow your capital to await you in retirement? Or do you need income now from dividends or bonds to make ends meet and put food on the table? Or do you wish to trade stocks more frequently to produce income so that you can reduce your hours at work, for example? Next comes administration and housekeeping. Looking after the admin side of investing, for example PC backups, portfolio management and accounting, is often thought of as boring and taking up time that could be spent researching stocks. Unfortunately, if you're serious about investing, then keeping secure backups and details of your trades is essential. And if you're successful in your investing, then you'll need accurate records for when the taxman comes knocking. I'll talk more about these aspects and the techniques I use in later lessons, but for now just be aware that all these things are important if you plan on investing for any length of time. The next pillar is fundamental analysis. Fundamental analysis is a gathering of information on the finances, products and potential profits of a company that you're thinking of investing in. It can take many forms, from the reading of annual reports and attending AGMs, to simply walking down the high street and seeing which shops seem to be busiest. Fundamental analysis is more relevant to investors that plan to hold their stocks for the longer term, and the idea is that they buy companies whose intrinsic value they've calculated, in the hope that the stock price will rise over time to match this intrinsic value. This is the essence of value growth investing, and we'll be going into much greater detail about this in later lessons. Next comes technical analysis. Technical analysis is the study of stock price movements, which is usually done with the help of some sort of graph or chart. This shows the fluctuations of the stock price over time and can help traders to time the purchase and sale of a stock. This sort of analysis is usually performed by traders who only hold their stocks for short periods of time, sometimes only seconds, before selling. The next pillar is money management. This is a vital discipline that needs to be mastered if you intend to invest for very long. Money management involves assessing the risk of loss before you buy a stock and managing your investment once you're in it. This includes knowing where to place your stops and having a plan in place to take profits as your investment moves in your favour. All these factors can be combined into an investing system, which all successful investors develop in order to maintain discipline and to help them pull the trigger when it comes time to buying shares in companies. This brings me to the final pillar, investing strategy. An investing strategy brings together all of the elements I've discussed so far into a system that identifies what you will invest in, what time frame you will trade over, and how much you will risk on an investment. It'll also include rules for buying and selling stocks once profit targets are reached or your stops are hit. So there we have the 7 pillars of stock market investing. All of the pillars are important if you're going to be successful on your investing journey. Remember, the 7 pillars are there as a framework for your investing education and cover most of the topics you'll encounter in your early years as an investor. Make sure that you consider all the pillars when you're investing, and you'll have a solid platform to build on.